The following program is paid for by Lifespan Wealth Management, providing financial advice since 1993. At Lifespan Wealth Management, the main thing they do is provide retirement planning and advice and manage their clients' investment accounts. If you're looking for a financial advisor, contact their office at 478-922-8100 to set up your complimentary consultation. Lifespan Wealth Management has offices in Macon and Warner Robins for your convenience, and you can learn more about them by visiting their website at retirerelax.com. While you're on the site, visit the special report section, which provides great financial education information on many different topics. You can also sign up to receive their digital feeds, which are short videos providing great information relevant to retirement, investing, and matters that affect your money. They also offer seminars to the community at no cost. If you're looking for a guest speaker for your church or civic organization, give them a call to discuss the topics you would like them to cover. Again, their contact number is 478-922-8100. Now, from the Macon studio of News Talk 940 WMAC, it's time for Your Money with Sherry Goss, Randy Goss, Jonathan Eisner, and Corey Albrecht.
Good morning, everybody.
Good morning.
Yeah, we hope you're doing well, and thanks to all of you for taking time out of your busy Saturdays to be part of our show. And as a reminder, if you have topics that you would like for us to cover in future broadcasts, please email me, randy@rfmoney.com, and we will hop on that and start doing some research. And as a reminder, to join the 2026 Run to End Alzheimer's event that's going to take place on April 4th, and it's going to run through the landings as it normally does, and there'll be a 5K and a 10K. Shotgun start will be at the Landings Point, which is a little shopping center out on 247 at the corner of Sandy Run, and it's where the Two Guys and a Pie and a Cuban restaurant is located. Both are really good to eat at. So you can register at run2endalz.org, run2endalz.org.
And they have done a really good job of raising money for the Alzheimer's Association.
Yes, they have.
Phenomenal. So I love the story that came out this week. RFK Jr. just revealed that the U.S. Sorry, my throat is weird. RFK Jr. just revealed that the U.S. will have its first ever federal definition of ultra-processed foods, and every food in your grocery store will have a label on it. It'll have maybe a green light, a red light, or a yellow light telling you whether or not it's going to be good for you, and it's going to evaluate all of the ingredients. I don't know how they're getting this done in 1 year.
I don't either.
That's crazy. RFK said, if you want to be healthy, we're going to give you the information to take control of your own health. I'm interested to see what this does to supply and demand for certain foods. And did you guys see the fitness challenge that he created? He can do 100 push-ups and 50 pull-ups in less than 10 minutes, and it was just incredible to watch. And he wears jeans to the gym. And Pete Hegseth did it with him. So did this inspire you to do that push-up challenge at the office?
No, it's just something I thought about sitting around the lake house one day. We need to get more invigorated and active. In case y'all didn't know, we have our own challenge each day. And the goal amongst the people in the office here is to do 100 push-ups in a day. And we've only missed a few days since we got started since January. But we don't have a pull-up bar. But maybe we'll install one. But
we used to have one here. Remember that?
Not a pull-up bar.
Yes, I did.
Okay.
We have one back in my old office.
We can put one in. That's not a big
really
deal.
It's really easy.
Okay. But anyway.
It's such a great challenge because it's we break it up and we do as many as we can in a certain segment. And usually that's between 30, depending on who of us it is, between 30 and 60 in any given set. And then we do 2, 3, 4 sets throughout the day. Sometimes we hit 100 and some of us, not myself,
we've got
hit 150 plus. But we do strive to all at least hit that 100 minimum. It's been a great thing. And it's like, it doesn't hurt anything. It helps.
It helps. It gets you out of your chair. It makes you not get so stagnant and tired.
In your head.
Yeah, in your head. So
it's funny though, because we'll hit 30 plus push-ups at a time, and then we're out of breath for about 4 minutes. And people in the office have to just understand, like, hey, give me a few minutes because we just did our set. So give me a few minutes and I'll get back with you on that when I can breathe.
I'm trying to get 50 to 60 per set. That's my goal.
Yeah, and you're accomplishing that. Yeah. So it's been great.
I'm up to about 50 push-ups per set, and when we try and strive for that 3 to 4 sets a day, that puts me between 150 to 200 just while we're at work. And I do a little home routine workout, so the extra push-ups on top of it are a nice addition to the 30 minutes that I work out at home.
That's nice.
Yeah. Randy, I got to admit, when you first asked me about it, I was kind of like, I don't know. I hadn't done push-ups in years. I don't even know if I can still do one. And
Look at you now.
yeah, the progress has been, I got to say, I'm impressed with my own progress. I'm not trying to boast, but I started out on my knees.
Yeah.
I started out doing them on my knees, and I was doing 15 or 20 at a time on my knees. And slowly I worked in a few from my feet like you do a normal push-up. And now I don't do any on the knees, and I'm doing, like these guys, I'm doing 30 plus per set. Mm-hmm. Most of the time it's 35 or 40, but
that's awesome.
Yeah, it's a really great challenge. So thank you, Randy, for starting the push-up challenge in the office.
So I just love that you guys are doing this. And Leanna, our daughter-in-law, has joined the firm, and she's participating in the push-up challenge too. She's increased from a starting point of 20 to 25 and now is up to 60 a day.
The funny thing was Leanna tried to show out on her first day, and she did 75. Not at one time, but she did a couple of sets. And the next day she was so sore, she had to dial it back.
She called off of work.
That's
I'm
right.
just kidding.
But she stuck with it, and she's doing more every week. And since we've made this part of our daily routine, we feel a little guilty if we miss a day or we don't reach the full 100 because of workload or whatever. So anyway, it's a good thing.
Or like if any of us have to work from the house,
yeah,
we come in, we got to make up for lost time, when we get back in here. So It's cool. It's been very good.
Now on to the new inflation number boosts. Boost support for another interest rate cut. The U.S. Bureau of Labor Statistics reported that the Consumer Price Index rose 2.4% year over year in January 2026. That's down from 2.7% in December and slightly below what economists had expected. The 2.4% clip marks the lowest pace of inflation since May of 2025. Core CPI, which strips out volatile food and energy prices, rose 2.5% annually, the lowest reading since April 2021. On a monthly basis, prices climbed just 0.2%, the smallest monthly gain since July. However, the cooler than expected inflation data has renewed market speculation that the Fed could resume cutting rates as early as June.
Yeah, and this matters because the Fed benchmark rate has a direct influence on what banks charge customers for borrowing. When the Fed cuts rates, interest rates on credit cards, auto loans, personal loans, and home equity lines of credit often follow. And for people carrying variable rate debt or planning a major purchase, a rate cut can mean meaningful savings. That said, analysts expect the Fed to hold steady, though, through the spring while officials weigh ongoing economic uncertainty, labor market conditions, and whether inflation continues to move towards the 2% target. Consumers shouldn't count on relief before summer, though. But the January inflation report is an encouraging sign that the path towards lower rates is still open.
Yep, indeed. Okay, what will the Iran strikes Iran? I learned a few months ago at the age of 41 that it's Iran, and you should never say Iran. I don't remember where I heard that, but anyway, I still say Iran mistakenly. So it's Iran. What will the Iran strikes mean for U.S. inflation? It isn't the 1970s anymore, but global oil market disruptions can still hurt. I know we're all weary of high prices, and just recently we've begun to count on cheap gasoline, I know I have, as a welcome offset for sticker shock at the grocery store. The Iran conflict threatens to throw off course. Oil prices surged after the U.S. and Israel launched attacks against Iran, along with diesel and gasoline futures. The conflict, depending on how it progresses, could lead to higher prices at the gas pump and higher overall inflation. Once again, we're already seeing this. I mean, it shot up to over $3 a gallon just this week. It's too soon to know with any clarity how the conflict would affect overall U.S. prices. But here's how gasoline and inflation fit together in some possible scenarios.
Consumer prices were up 2.4% in January from a year earlier, cooling from December's 2.7% increase, thanks in part to lower gas prices. Prices at the pump were down 7.5% year over year in January. However, benchmark U.S. crude futures rose 6% Monday to $71 a barrel after the Iran conflict began over the weekend, and they are up nearly 24% year to date. Crude prices are by far the biggest single factor driving what Americans pay at the pump.
A rule of thumb among economists is that a 5% increase in oil prices raises year-over-year measures of inflation by about 0.1 percentage points. That might not sound like much, but over time, increases at that level have a noticeable impact on prices. And higher gasoline prices also feed into costs for other products and services. Shipping goods like food and trucks becomes more expensive when oil prices rise, as does the cost of jet fuel, which feeds into the cost of airline tickets.
Yeah, and the conflict impact on gasoline prices and inflation could be fleeting. Economists say it will depend on the operation's severity and duration. If the energy market's disruptions are brief, there might be fuel price increases that lift inflation slightly, but only for a month or two. That was the case last year when the 12-day conflict between Iran and Israel lifted oil prices by only about $10 a barrel at that peak, and that was very brief. Energy infrastructure was largely spared in that conflict, so output was able to come back online very quick.
You know, consumers drive by gas stations and see posted prices every day. Gasoline is a relatively small slice of average consumer spending. It represented only 3% in December, according to the latest government inflation report. But psychologically, seeing the elevated prices virtually raise overnight has an effect on consumer sentiment.
You bet.
I agree. At least we are not as exposed to global oil markets like we were back in the 70s, long before shale drilling led to huge increases in domestic production and cut reliance on foreign oil. Back in the 70s, massive oil disruptions contributed to 2 recessions, but big oil shocks can still hurt. After Russia invaded Ukraine in early 2022, both crude oil and gasoline prices rose above 30% over 4 months and contributed to the annual inflation rate spiking to more than 9%.
Yeah. Ouch. There still could be a significant impact of oil prices if oil prices go to $100 a barrel for a sustained period. The increase to headline inflation might be a more meaningful 0.7%, according to Capital Economics. And this could very likely make the Federal Reserve far less willing to cut short-term interest rates. Meaningfully higher inflation would also squeeze Americans' incomes and in turn their spending, which is the main driver of economic growth.
Right, and the Fed will not need much ammo for halting the easing program. The case for Fed easing has already weakened this year amid signs of a stabilizing labor market and some stubborn price pressures. Now, a potential energy shock layered on top of last year's tariff increases, which are still filtering through the price chain, could have a big effect on the Fed's further pause on cutting the rates.
While rising oil prices hurt consumers, they're good news for domestic oil producers who have been dinged by a run of cheap oil. In places like West Texas, prices below $60 a barrel mean oil producers struggle to make a profit. But if prices stay at or above $70 a barrel for more than a month or two, that could translate into more production, according to the Permian Basin Petroleum Association.
Yep. Okay, switching gears, the date night talk that every couple should have. The division of labor in a marriage often results in one person handling banking, subscriptions, passwords, and more. That can leave the other person in the dark about how to locate and access the family's accounts. I can speak personally on this. This is how my house is. I handle paying bills, passwords, online, money movement, etc. Katie has other duties that I would be up the creek if she were to leave. So we complement each other well in that way. But this article was meaningful for me because we need to have something in place where she would know a lot of the things that I take care of.
That's right.
If nothing else, a continuity book amongst the program for the programs that you manage.
Yeah.
So
yeah, I see this a lot with my clients.
Yeah.
Same exact thing all day long.
I'm sure it's pretty prevalent. When couples get married, one person takes on paying bills, the other may handle grocery shopping, daycare, managing the house, etc. Then something happens to the person paying the bills. They may forget to pay them on time or just be too busy to deal with it. And the spouse could take it over, but it's all set up online, and the new spouse doesn't know, the spouse doesn't know all the passwords. This can be really stressful, especially if the other person was also managing their investment accounts. If this is your situation, here's what you need to do. First, write down questions. What accounts are the bills being paid from? Where are copies of insurance policies? Where are all the passwords? I recommend that you create a shared master document listing all the accounts, including company name, account number, password, phone number, just to have everything easy to find. Keep this list in a safe place. You could also store them digitally in a password manager that both of you have access to. There's a low-threat way to open these conversations. You can say, if something happened to you, I'm concerned I wouldn't know where everything is. And last, ensure authorization. Get on the phone with every account and make sure you're both authorized to talk to the company and conduct transactions.
That's a big deal.
You know, that is a big deal because I had a call this morning from a friend and a client that is working with a large bank, and most of the accounts that were in their family were already made joint. And now she has found this one account that has a lot of money in it. And now the bank won't let her even put a power of attorney on the account to get the money out. I mean, it's the wildest thing I've ever seen. So you've got to make sure that you don't get put into this kind of situation where you're going to be locked out of accounts or that the money is yours. So either she's going to have to get an attorney to go fight the bank, or she's going to have to wait until the money's turned over to the state, which could be several years before she even gets her hands back on that money.
Nightmare.
Yep.
Now, this is not currently an issue that I have. If something were to happen to me, there's not someone that would be stuck paying any bills. Everything that I have is paid for or is set on auto pay, and I have beneficiaries or limited access on all of my existing accounts, which is not a lot of accounts. It's a much simpler process when you don't have much to worry about, but this is not the case for the majority of people. If you have people that rely or depend on you, don't make it a harder time for these people than it has to be. Let that be your last gift to them, that you have the foresight to iron out the kinks and create a plan that didn't make the transition more difficult than it had to be.
Yeah, I agree.
Let me interrupt real quick. Even though you're young and you don't have a significant other and you don't have a whole lot of accounts, right? You still did the right thing by listing beneficiaries on your stuff because, let's say that you're a Roth IRA, that a court is going to determine who gets that. You wouldn't want that. No. So you've still taken the proper steps. Even if, so this is for anybody out there, if you have what you think is a small amount of money or a small amount of accounts, you still got to take these measures to make sure that it doesn't go where you wouldn't want it to go if you passed away.
That is correct. And, I highly encourage you to use a password manager, a program that simply, you only have to know one password to get into it, and you and your spouse can share it, well, like Sherry and I do. And, once you have that password, that password manager set up, like I said, you only have to have one password. You don't have to remember the 80 other ones that are hiding inside that manager. But you just got to make sure that you keep it secure, because it is important that you don't let anybody else have access to it.
Yeah.
But the nice thing is, too, when you set up two-factor authentication on that password manager, someone would have to have your phone to get into that account, even if they did have your password.
So anyways, good. Very good information. So last week we discussed 3 great retirement vehicles available to business owners. One of our listeners, after working through a trial run on her taxes, realized that a SEP IRA was the perfect tool for her to offload some of the tax burden she has. So she stopped by the office and spoke with Corey about what it takes to make that happen. After a brief meeting, she went on her way, but will return with the necessary documents to complete the account opening process. Provided she has the account opened and funded with the contribution by March 15th, the corporate tax filing deadline of this year, she can allocate up to $72,000 into the SEP IRA account, reducing her 2025 taxes. Taxes will be deferred, and the account will continue to grow until she starts taking distributions in about 25 years. When I went to work at Rosenberg, I own my own business, and contributing to a SEP each year helped me save for retirement and reduce what I owed in taxes. If you are self-employed, please come see us to talk through this option, because it is one of the best things ever.
And when she came in, she had some questions about other plans like a simple IRA and a solo Roth 401k. And that is when you really need to talk out your situation and look at how the numbers work for you. Each of these programs has its pros and cons, and that is something that we can discuss with you. We can look at your whole financial picture and help you make the decision that works best for you. There is no true best program. There can, however, be a best program for you.
Yep. And I would also add, as it relates to SEP IRAs, that the deadline is actually whenever you file taxes for your business. Mm-hmm. So normally that, as Sherry mentioned, normally that's March 15th for corporate filing deadlines. But if you file an extension, then you can contribute to your SEP IRA for as late as September 15th when you can get that 6-month extension.
I'm glad you said that, because I have clients that do that. It's very incredible.
All right, let's talk about Trump and his State of the Union address. In the State of the Union address, he said he wants to fix a gross disparity in American retirement systems by creating a new account for the roughly 56 million Americans who lack an employer-sponsored savings plan. Trump said to remedy this gross disparity, he is proposing providing access to the same type of retirement plan offered to every federal worker. The plan will be based on the Thrift Savings Plan offered to federal workers with the U.S. government, and it would provide a match of $1,000 per year. The current retirement system effectively excludes millions of Americans who lack access to a 401k and similar plans, according to a recent report by the National Institute on Retirement Security. The report highlights the fact that most Americans without employer-sponsored plans are unlikely to put money in any type of plan for retirement.
Yep. To succeed, Trump's proposal must meet two fundamental requirements. One, generating the funds to save. Two, invest in accounts that are overseen by a fiduciary. Millions of workers with no money left over from their paychecks after covering the cost of living need more than just access to a retirement account. They also need money to put in the retirement account. This is why, without congressional action, most low-income workers will still likely be left out. Trump's proposal is only to match funds put in accounts by employees. Some sources report that the administration's plan, which is still being fleshed out, would utilize a new Savers Credit created in the Secure 2.0 Act of 2022, which will soon be available to low-income workers with no tax liability. It's a good start, and it could easily be modified to put a few $100s each year into accounts for all workers.
In last year's tax and spending legislation, Congress met both tests in a limited way when it created Trump accounts for newborn Americans, which promised to seed each with $1,000.
Under current law, employee contributions to retirement accounts are massively subsidized by the federal government. The lion's share of those that benefit from traditional tax deferral and tax-free gains in Roth accounts goes to higher income workers. Most low-wage workers get little or no benefit from this tax expenditure. A national retirement savings system that provides every American worker with a modest tax credit to save for retirement could improve economic security, help people prepare for old age, and facilitate saving for emergency expenses. Some are trying to sell this program as a type of inclusive capitalism that could make every American worker an owner of assets generating income. They believe this system could be funded with a relatively small sacrifice from high-income earners without increasing federal spending.
Yeah, under the proposal, Congress would task an independent board with setting up national system offering retirement savings accounts for everyone issued a Social Security number. This new account would not replace the Social Security or current employer-based retirement savings, but rather complement the existing system. The board would have a fiduciary duty to manage the accounts, which would be particularly helpful to low-wage workers and those whose employer offered no retirement plan. The account would be available to receive funds throughout a person's work life, and upon retirement, the funds could be rolled into an IRA.
The federal government would make modest contributions to these accounts. Optimally, the lower someone's wage, the higher the contribution should be. Workers could be offered basic financial education and would have some latitude to choose from a basic menu of investment options similar to what federal employees have.
Yep, and to accommodate the needs of low-wage workers, accounts could be designed with flexibility to allow some borrowing for emergencies, such as getting one's car fixed to get to work or covering medical expenses. Most of the balance, however, including government contributions, should be shielded from early withdrawals. Today, almost half of Americans have no assets and little or no retirement savings. Millions of workers have no money to save and no retirement account to put it in anyway.
Yeah, and I can't imagine Congress being able to find the funds to put $1,000 per year into the 56 million accounts that need to be funded. That would equate to about $56 trillion a year. So I can't see how this is going to work.
Agreed.
Unless you go back to...
How are we going to pay for it?
Well, there are folks out there that are saying this inclusive capitalism is really a socialist paper that I looked up yesterday on this. That says that they want to do it that way by taxing the high wage earners. You know, and at some point that golden goose is not going to have any gold to get out of anymore.
Right.
So, all right, let's talk about a study by Ramsey Solutions that finds Americans prefer financial stability over excitement in a partner. Americans say money matters in relationships, but many avoid talking about it. The 2025 State of Personal Finance study found that 63% of Americans would rather have a partner who is financially stable but not very exciting than the ones who is romantic but bad with money.
That's hilarious.
Yeah, right. Nearly 75% of women choose to prioritize financial stability over romance.
Despite those preferences, the study also found that 56% of couples say they never had a serious conversation about money before getting married. That blows my mind. That was one of the first things that we discussed and we were dating, like on the third date.
Yep.
Money and kids and how we save and spend are important to us. Yes, very early in our relationship, we agreed on a lot of financial practices. Dr. John Deloney says that when couples avoid talking about money, it is usually not about math. It is about fear, expectations, and trust. In our culture, money is tied to fear, shame, and identity, which makes it harder for couples to talk about than almost anything else. Money reveals what we value, and when couples do not talk about it early, those unspoken expectations often turn into conflicts and resentment later. You do not need perfect finances to build a strong marriage, but you do need honesty and the willingness to have hard conversations.
Yep. The research found that couples who discussed money before marriage were more likely to rate their marriages as, quote, great, showing a link between communication and a healthy relationship. Other key findings from the State of Personal Finances study include only 45% of Americans say they're very confident that they could handle a $1,000 emergency expense.
Isn't that mind-boggling?
45%.
Who are they surveying? I never get called on any of this.
But this is not a new number. We hear numbers higher than this often.
Every week, yeah.
Yeah.
Right. 7 in 10 Americans did not know that the standard deduction is changing on the 2025 tax returns. Half of Americans drive a car that is 8 years or older. 51% of Gen Z and millennials say that they're extremely or at least very optimistic about their financial future. Saving money is the top financial resolution for 2026, ahead of eating healthier and exercising more.
What is so crazy to me is that Randy and I have saved all our lives, and now one of our goals is to start spending some of this money. Randy has scheduled a trip to Alaska this summer. We're taking a trip with the kids as well, and I still shop at discount stores. Once savings becomes a habit, it just sticks. Corey, you are not a spender. What is something you would like to do?
Most of the money I spend is on trips down to Florida to hang out with my friends down there, which is not a whole lot, maybe $100 a month. But they have been floating the idea of a trip to Japan. As far as international travel goes, I think that would be one of the few countries outside of the United States.
One of the safer ones.
Yes,
certainly.
That I would even be willing to visit. Outside of a trip, buying a home would be nice at some point.
So when I was in the insurance business, I won a trip to Japan, and I got to tell you, it was amazing. You really need to go. It was phenomenal.
Okay, we're going to take halftime.
You've been listening to Your Money, brought to you by Lifespan Wealth Management, proudly serving Middle Georgia for over 30 years. Our mission? Helping folks just like you plan for a secure and stress-free retirement. Need a trusted financial advisor? Call us today at 478-922-8100 and schedule your complimentary consultation at our Macon or Warner Robins office. Want to learn more? Visit us anytime at retirerelax.com. Because when you plan smart, you can retire and relax. And here's something extra. We offer free educational seminars for the community. If your group needs a guest speaker, give us a call and let's make it happen. That's 478-922-8100. Now, let's get back to the show.
Okay, I'm going to interject here for a second and go a little bit off topic. Speaking of seminars, we attended a seminar this week. We were asked to speak at Green Acres Baptist here in Warner Robins, and they were the most gracious hosts. They fed us. They were the nicest people. We had great conversations with them. Sherry talked with them about, it was an older group of people on average, and Sherry talked to them about AI and scams and things to be aware of. And here's what opened my eyes. We haven't talked about this since the seminar, but if there were 40 or 50 people in that room, would you say half of them raised their hands and talked about some scam alert?
Yes, it was
or
phenomenal.
Some scam? It was amazing.
Instead of me talking, they talked.
Yeah.
And that's what made it so good. They shared their own personal experiences. It was phenomenal.
But how many of them have had something happen, and all of it pretty recently too?
Yes.
You know, where as soon as one person got done talking, the next person raised their hand and they said, well, this happened to me and this happened to me. And so Sherry pointed out to them, hey guys, when these things happen, you guys meet once a month or once a week and you guys have these lunches. You guys talk to each other about this stuff. But what was so eye-opening to me was we know that older generations and younger generations are very vulnerable or impressionable or whatever word you want to use. But this took it home for me, because for so many of them to raise their hand, you know, and say, man, watch out for this or this.
And you know, John, that's a good point. A lot of seniors are embarrassed that they get caught up in a scam, and they don't talk about it.
Right.
And they don't have anybody that they can go to as a sounding board when they get presented an offer, you know, that's too good to be true, you know, kind of deal. And then they put their credit card out there, and then they become a scam victim.
Right.
So having a group like that, or just friends, even if you're not going to a group, someone needs to be on your side. So when you get these kind of things in your email or your post box, you can at least have somebody to bounce it off of before you make a decision to throw your money.
Yeah, I agreed. I told them every month, anybody has something new happen, they need to bring it up in the meeting. It should be a monthly topic because it's only going to get more and more.
Yeah, speaking of credit cards, Randy, one gentleman raised his hand and told us that that his credit card information was in Brazil or somewhere, South America somewhere. Another gentleman told us that this one was crazy. Another gentleman told us that AI had impersonated his grandson's voice.
Yep.
And called him in the middle of was it in the middle of the night? I can't remember. And said
for money.
Asking for $9,000 because he was in jail.
I had a client that had the same exact thing happen in the middle of the night.
Yeah.
Same exact. And he got up and got his credit card out and gave it to him.
Right.
But he used his nickname, the grandpa's nick.
They used the grandpa's nickname, which was Pop or something like that. What gave it away was that the grandson goes by Josh, but he called himself Joshua on the thing, and they said something doesn't seem right here.
Well, the voice is getting to be so good, and actually video or still images are getting to be so good that most people cannot tell the difference in them. But I was reading yesterday, and it may be in the show somewhere, that scammers can replicate your voice to a T with less than 3 seconds of audio that they can get off of social media. So be careful what you're posting out on social media.
So a nice point. I'm glad you brought this up. If you have a church group, association, whatever kind of group it is, or just a group that gets together for fun, have us come and speak to you and have us come do a program. We can talk about all different topics from long-term care to investing to the stock market to whatever you want to hear about. We're all available for that, and we love doing it. It's a lot of fun, and we meet a lot of nice people. So
very much.
I've got 4 programs scheduled for this year so far, which is the most I've had since COVID, which really has been horrible.
I'm glad to see people getting back out.
Me too. Anywho.
All right.
Okay, shifting gears. Money might not buy happiness, but in a modern society, being poor isn't great either. If you want to transform your life, personal finance books are the right way to start. By learning how to manage your money correctly, you will begin to feel control in your life. Once you know how to manage your money, pay off your debt, and invest your savings, you will have financial security. This will give you more freedom for more important things in life: health, love, friends, family, and personal growth. This is the list of books that you can read that may give you a better perspective on not just money, but other parts of your life. For example, the book The 4-Hour Workweek by Tim Ferriss.
So this is a book for people who are self-employed. I can't do what I do in the time he talks about, but there may be some helpful tips for you if you are working from home. Next would be Rich Dad, Poor Dad, which is a great book. The author, Robert Kiyosaki, talks about how he grew up and learned about money from 2 very different dads, his actual dad and the father of his childhood friend who was like a dad to him. The very different ideas of his not-so-wealthy dad compared to his friend's wealthy dad reveal very different ideas on life and wealth. This book was published in 1997, but it made me think more about the importance of financial education. He makes a strong argument for the importance of having money working for you instead of you having to work for money. One of the memorable quotes from the book to me was, "Rich people acquire assets, the poor and middle class acquire liabilities that they think are assets." That is so true.
It is so true.
You may say, "I'm not rich, so how can I do this?" And that is a good question. You may not be rich now, and you might never be rich if you don't start analyzing how you spend your money and understanding what your long-term goals are.
Now, I did buy a new car, which I know a lot of people say not to do because of how much value you lose driving it off the lot. And like Sherry said, acquiring liabilities. But when I bought my car, it was the height of COVID, and the difference between a used car with 15,000 miles and a brand new car was $3,000. I justified it with the fact that the new car came with double the warranties, and with the trade-in, I still had enough to buy the new car outright.
Yep, that's a great book. I'm seeing people now that have more debt than I can believe. A mortgage payment, 2 car payments, credit card debt. It is eating their income to the point they can barely save. Debt is horrible. Get rid of it ASAP and start saving that money instead of making payments on debt.
And, I'll say this before we go on with the list of books here, but, you don't have to read and become an expert before you start making the changes in your financial life. You can get started by creating a budget now. You can analyze where all your money's going every week, and then start making the little steps while you're reading these books. So, like Sherry was saying, the debt payments make others rich. If you feel like you're never going to be worth more than you are today, I encourage you to get a copy of the book, The Magic of Big Thinking, The Magic of Thinking Big. It's an older book by David Schwartz. It was written in 1959, but has been updated and released in new editions over the years. The book is all about self-confidence, removing negativity, and the importance of believing in yourself. Only by thinking big and surrounding yourself with positivity can you achieve happiness. These are certainly great attributes, but you also need a good plan of action to get out of debt and start saving. So why limit yourself? Aspire to where you want to be and become knowledgeable about what it takes to get there.
Yep. And then there's a book you may have heard of or even read. It's The Millionaire Next Door. This book provides insight into who the real millionaires are, people that live well below their means and achieve great wealth through hard work and saving that hard-earned money. This book has sold over 3 million copies and spent an astounding 170 weeks on the New York Times bestseller list. The book's success spawned other works, also including The Millionaire Mind and The Millionaire Women Next Door.
Yeah, this is a great book. And this was my dad, who was a farmer. He had one suit and wore the same jeans and flannel shirts every week. He was a saver, not a spender, because he grew up during the Depression. He would buy me a pair of shoes and underwear, and I had to come up with the rest of my clothes. I started sewing in the 3rd grade because he would buy me a pattern and material. Thank God I had 2 sisters to help me get good at this. I couldn't wait to get a job and was a dishwasher at age 15 so I could finally buy store-bought clothes and not look like a total nerd. I think Randy had a very similar experience.
I did. I was a dishwasher, went from a dishwasher to a butcher within a year at Western Sizzler. I love getting the paychecks, but the things that I learned that have stuck with me my entire life came from that place. The most important one was I saw people who never grew out of the lower level jobs.
Right.
One old guy there had been a dishwasher for over 20 years at various restaurants. And, if that's what he really wanted to do and that's what he wanted out of life, that's fine.
I tell you, that's a horrible job. I would come home with my hands just burning from being in that hot water.
Well, that and the acid to clean the grease on the floors.
It was terrible.
But what it did for me is it just gave me a lot of motivation.
Absolutely.
Not to be in that.
You don't want to be that.
And Sherry's story about her dad is almost identical to my grandfather, who is also a farmer. I think every time I saw him, he was in the same pair of jeans, but he wore a white shirt. Unlike Sherry's dad, who had one nice suit, my grandpa's nice outfit was his firefighter's formal uniform. Same generation of people have the same habits.
Yep.
They just were not spenders. The Psychology of Money is a book that I like, and here's a quote. Spending money to show people how much money you have is the fastest way to have less money.
And a quote that is more of a Gen Z quote, referencing the living below your means that Jonathan talked about, is act broke, stay rich.
Very good.
While there are aspects of your financial situation that are outside of your control, building and maintaining a good credit score can help you weather the challenges and save you money in the long run. Take every opportunity you can to get to improve your credit and to get that score as high as you possibly can. Check your credit score by visiting the 3 credit bureaus, Experian, Equifax, and TransUnion. You'll have to create a login for each site, but it is pretty easy. You need to review these reports once a year to make sure that they're accurate. Also, as we mentioned before, if you're concerned about someone hacking into your credit score, you should lock it down.
Absolutely.
This is another thing we talked about with the group this week, is how easy it is to call the 3 different bureaus and shut down your credit. You can set up online access to do it too.
Yes, that's
but
what
for that
I did.
generation of people, it was probably easier to just pick up the phone, call, and you can do it in 5 minutes per bureau. So
just write down your password, please. All right, so here's an alarming fact. Every 11 seconds, 1 in 4 Americans aged 65 and over experience fall-related injuries that require emergency medical attention. One of my clients decided to clean their ceiling fans and fell from the chair she was standing on. When she fell, her hip came out of the socket, and she had to lay there on the ground until her husband got home from work. She couldn't move to get her phone without extreme pain. If you have balance issues, please check out the trackers that you can use. There are necklaces, bracelets, and even rings. Anything that can help you ask for help is a good thing.
Now, my roommate down in Florida was a firefighter, and he would often come home and tell me about the calls they went on. And there was many times I had to ask if he was actually a firefighter. In the year and a half that I lived with him, he went on 4 fire calls and hundreds of elderly fall calls. I would ask him if it was just his department, and he said that each department in our area handled more falls each year than all of the surrounding departments' fire calls combined. Florida is a flat state with flat homes, and there are tons of falls. If you have an elderly family member, especially in a home with stairs, urge them to get a device.
Yeah, and that's a good point. You need to do that. But how do you monitor mom and dad without becoming Big Brother? In-home sensors and location trackers can help families keep tabs on aging loved ones while respecting their privacy. And being geographically separated from an aging parent does bring worries. How do you know if mom or dad has fallen? Do they get to their destination safely? What if they wandered off? In recent disappearances, the recent disappearance of Nancy Guthrie has brought these worries to the forefront. While an abduction is a rare event, falling and getting lost are common problems for older people, and quickly getting help for a relative in need is critical.
There are devices and services that allow family members to keep tabs on their loved ones remotely and receive instant notifications if something goes wrong. But there are also barriers that might stop people from adopting these technologies. For one thing, loved ones don't necessarily want their home to become a house arrest situation, with cameras pointed in all directions and sensors and alarms on every door. As a result, newer, more subtle technologies for monitoring, in-home radar instead of cameras, wearables that provide other benefits and only trigger alerts when there's a real emergency, these kinds of things are gaining popularity. That's why any decision to introduce new technology should be accompanied by a discussion of privacy and well-being. Despite all the progress, there's currently no single overarching solution. No one wants to manage 15 different apps and get 15 different notifications. You really need to consider what your goals are before you start buying these sensors. So we're going to discuss the most popular options for both inside and outside of the home.
There are what is referred to as wearables and maybe cameras. It often pays to start with a wearable that provides multiple benefits, including fall detection and emergency contact alerts. Most newer Apple Watch models, some Garmin smartwatches, and some Samsung Galaxy Watches models offer this. While these devices can be useful both in the home and when the person is out and about, they also need to be kept charged, which can be a liability.
Charging, that's the reason I got rid of my smartwatch. I did not want one more thing requiring me to have to plug it in every night. So wearables are one option. Security cameras are another, and they can detect motion inside or outside the home. This means family members can quickly find out if an aging relative with cognitive issues has left home. However, people aren't always fans of cameras, and I get that. And a concern with these is how long makers of the internet-based cameras retain the footage and who has access to it. So what about in-home sensors? A company called Ponto Sense, Pontosense, developed a radar system which can accurately detect a person's movement and vital signs from 20 feet away. It doesn't use cameras or microphones. Families usually install one small device in the corner of each of 3 rooms in the house, and the bedroom. That's usually the bedroom, the bathroom, and the main living area. It's a passive thing in the background, and their chief commercial officer says the company doesn't store any data related to the customer's movement or activity.
PonoSense is an app. Fall alert notifications are by default, but families can choose to get alerts when their loved one has entered or left a room, gotten out of bed, or been to the shower. A weekly report details the person's sleep habits and mobility. If he or she gets up frequently at night, it might recommend night lights. If a decline in mobility is detected, it might suggest a walker. The system can also be used to alert a call center, which can contact emergency services. The cost for the do-it-yourself kit ranges from $500 to $900, depending on how many radar nodes the customer buys. There is a monthly charge of approximately $65 for the app-related service, including any calls to the emergency center. And this just reminded me of something. So I have a client, her mother is in a facility, and she put cameras on the wall so she could look on her phone and see if her mom was in bed or if they were getting her out of bed or if she'd fallen out of bed. And they made her take the cameras down. The facility did. They said it was too much of a liability for her to be able to see what they were or were not doing.
Interesting.
And so they've shut it down.
How is that a liability?
Because she can see everything they're doing.
It's a liability for the company for not doing their job.
Right.
Yes.
Yeah.
But
that sounds like to me.
That really upset me when she told me that. I couldn't believe it, but they've shut it all down. Nobody has cameras in the rooms anymore.
Yeah.
Which I think is poor.
Not good.
No.
So what about location tracking? It's one thing to know how an aging relative is doing inside, but it can be more worrying when they have to leave the house. Some families have used the low-cost option of AirTags to track loved ones when they go for a stroll. A more comprehensive option is Life 360. The location sharing app popularized by parents who want to keep tabs on their teen drivers. I need to get that for my
I
kid.
thought about you when I read that.
I did too. I need to get
Our
that.
family has it.
You guys do?
Yeah, we do use it.
Okay. And you guys actually, like, when you use it, do you guys use it, I guess is the question.
I regularly check it because I'm like, oh, when's Dad getting home?
Okay.
When's
See his progress.
Evan, I'm supposed to be leaving with Evan in 20 minutes. Is he going to make it in home? And it'll tell you how far away they are, directions to them. I know when Evan's car died in Alabama, we were able to find him there, ping him, and then Mom and Dad were able to get to his car to pick him up and get him to where he needed to be.
And that's from the Life 360?
Correct.
Okay. We all have Apple iPhones, and you can share your location or give permission to share your location with certain people. And so I know where my older two sons are at any given time. My wife, we track each other. So I think it's similar to this app, which is, I guess, why I haven't jumped on it. But, if we're concerned about where my 16-year-old is, I can just map him and it'll show him. I don't know if 360 does, but it'll show, like, on the map his car actually moving.
Yeah.
So it's not in a ditch somewhere or anything like that.
Right. Anyways.
And the company introduced a new no-show alert last fall. Parents set an expected school arrival time, and it notifies them if their child doesn't show up. Now adults are using that feature to ensure their own parents get to the doctor's appointments and other places on time.
For aging relatives who are still driving, family members can receive reports of sudden stops or fast accelerations, as well as a notification of a crash. That would be a reason for me to get on it.
Yep.
Because the Apple thing doesn't do that.
I think the Life 360 paid premium version has that stuff.
Okay.
Ours, the base version, it'll tell you their trips, so like where they went, their max speed. But as far as crashes and the acceleration stuff, you have to get the premium for the
Do you have any idea how much that is?
I want to say
Probably
it's
worth looking into.
like $15-$20
A month?
I think so.
Okay.
And I'm not sure if that's for the plan or for the amount of people on it.
Gotcha.
I'm not sure about
Worth
that.
looking into for sure. For older adults who no longer drive, GoGo Grandparent offers car pickups that can be requested by phone and provides family members with notifications about the trip. They operate in all 50 states as well as Canada and Australia. But other rideshare services, Uber and Lyft, now also offer similar services for seniors. AARP says there's no shortage of gadgets to help older adults stay in their homes safely, but we're still a long way from an easy fix. The next big step is how they can get all these gadgets to communicate with each other and provide one notification.
Wouldn't that be a nice thing instead of
would.
having to have all these apps and different subscriptions? So
Now, did your mom agree to put cameras up at her house, or did she already do that?
she doesn't have cameras in the house.
Does she have a camera in the driveway?
No, she has an alarm. So when somebody comes down the driveway,
Right.
it beeps inside the house, but that's about it.
Do you have access to that stuff?
Nope.
Okay.
No, I mean, it's not online. It's just a little IR thing right there in their driveway.
Motion sensor.
Yeah. So, all right. But these things are good. I do worry about my mom over there in Thomaston. That's an
I
hour
do too,
away.
and her husband,
so-
who refuses to wear any of these devices.
Right. So, all right. Let's talk about investing. More low and middle income Americans are investing, and this is a good news, even as many consumers feel stretched to cover the rising daily cost. Since 2020, the number of low or moderate income investors has increased by 2.7 times, or 167%, according to research from BlackRock. Those findings are based on data from about 10 million active checking account users. The firm tracked money transferring to investment accounts, though it did not identify the types of investments the people had chosen. The data includes low and moderate income investors, evenly divided between those who had median net incomes of $29,000 and $51,000 in 2024.
Yep. So, what is it that has put investing within reach for these people? Since 2020, several factors have encouraged higher investment participation rates among these new investors. The factors include increased access to investment information and a wealth of online brokerage and trading apps, many with low or no minimums that have made investing easier. COVID-19 stimulus packages boosted consumers' available cash, and strong market performance provided an added incentive. Investors with low to moderate income are more likely to invest when they have enough liquid savings to cover at least 2 weeks' worth of expenses, typically in the range of $1,500 to $2,000. Moreover, short-term or seasonal income increases, such as tax refunds, bonuses, or temporary earnings, are also tied to increased investment activity. Low to moderate income investors also invested about 30% more as a proportion of their income from 2020 to 2024 than that same group had from 2015 to 2019, according to research.
Strong stock market highs in recent years have made many Americans richer. In 2025, 62% of Americans said that they owned stocks. Those most likely to own stocks include adults in households that earn $100,000 or more, college graduates, and married adults. Those less likely to own stocks include unmarried adults, individuals with high school education or less, and households earning less than $50,000. The most common reasons cited for respondents for why were a lack of available funds for investing and a lack of knowledge about the stock market. The bottom line is, if you have a retirement savings plan through your job, start investing. Call the advisor over the company accounts, get advice on what to invest in, and get started. It's never too early.
I'll never forget the Kroger cashier that came to see me one day. He was working as a cashier his whole life, and his wife is disabled and cannot work. He has managed to save $1 million, and when I go to Kroger, I still see him working. He's in his 70s. He is a saver and not a spender, and I was so impressed with what he had accomplished in his life, and he is such a nice person on top of it. It's amazing what some people can do and what others ignore.
That's right.
It's crazy.
Yep. At the same time, a record number of workers are raiding their 401k savings. More Americans are digging into their retirement savings because of financial emergencies. Last year, a record 6% of workers in 401k plans administered by Vanguard took hardship withdrawals. That's up from 4.8% in 2024, and a pre-pandemic average of was about 2%. The data paints a divergent picture of American workers' finances. While most are faring fairly well, some are experiencing heightened financial stress.
Workers have been saving more in 401ks, and balances have soared to all-time highs along with rising stock markets. With more people saving in 401ks, retirement accounts are an increasingly important lifeline when financial trouble hits. The uptick in hardship withdrawals marks the sixth straight year of increases since 2018, when Congress made it easier to take a hardship distribution by eliminating the requirement to take a 401k loan first.
Yep, the top reasons for taking hardship withdrawals last year were avoiding foreclosure and eviction, and foreclosure and eviction, and paying medical expenses, according to Vanguard. The median withdrawal was $1,900. More Americans are falling behind on debt payments, including on some types of mortgages, putting them at risk of foreclosure. The average income of clients seeking help from credit counseling agencies is rising. Still, unemployment remains low and consumer spending has been healthy. In recent years, Congress has also expanded the list of allowable reasons to take a hardship withdrawal. Under a 2022 law, it gave employers flexibility to permit them for victims of domestic abuse and federally declared disasters. That law also lets people take out up to $1,000 penalty-free for an emergency once every 3 years. Those who replace what they take out can tap their accounts again the very next year.
Another factor behind the rise is the spread of automatic enrollment. As it has moved more workers into 401k accounts, it is giving more people savings to draw on. Workers can opt out of automatic enrollment, but many fail to take that step. Among the roughly 1,300 employer plans that use Vanguard's 401k administrative services, 61% automatically enroll new hires in 2025. That is up 34% since 2013. People who take hardship withdrawals from a traditional account must pay income tax, plus often a 10% penalty if you're younger than 59 and a half years old.
Yep. Let's put this in context. Other data from Vanguard paints a positive picture of the financial health of 401k participants. Supported by strong domestic and international stock markets, the average account balance rose 13% in 2025 to a record high of $167,970. And a record high 45% of participants increased their savings in 2025, with most doing so in an automatic escalation program. That matches the 45% that raised their savings in 2024, which is great news.
That's fantastic.
In 2025, nearly one-third of plans with automatic enrollment started workers out at a savings rate of 6% of pay or higher, nearly 3 times the portion in 2013. This means that people are saving more, remaining invested, and being automatically rebalanced in a professional way. This also giving them a financial cushion when times get rough.
We're running short on time, but I think the last couple of years with the high inflation and people just being caught without a lot of money is helping change the mentality about wanting to be invested and wanting to save. I think there's a lot of things that have happened that are changing the psyche of folks. So
agreed. One last thing.
Yep.
You got, today is March 7th when you're listening to this. We got till April 15th to fund IRAs and Roth IRAs for 2025. I'm going to remind people every week. We've got about 5 weeks left. Have a great weekend, everybody.
Yep.
Excellent.
Thanks for listening to Your Money, produced by Lifespan Wealth Management. As financial advisors, the main thing they do is provide retirement planning and advice and manage their clients' investment accounts. If you're looking for a financial advisor, please contact their office at 478-922-8100 to set up your complimentary consultation. You can learn more about them by visiting their website, retirerelax.com. And if you have a question or a topic that you would like them to cover in next week's broadcast, you can email Randy at rfmoney.com. They look forward to connecting with you next week. Have a great weekend, everyone. Securities and investment advisory services offered through Osaic Wealth Incorporated, member FINRA SIPC. Osaic Wealth is separately owned, and other entities and or marketing names, products, or services referenced here are independent of Osaic Wealth.